The oil market is exploded, and this is panicking all traditional markets and businesses. Prices are skyrocketing due to this, and the profit margins are falling. This squeezes our pockets and makes us much poorer. In this video, we will examine the current state of the oil market, we'll discuss how to protect our savings, and we will talk about the greatest investor of all times, Warren Buffett, and how he is buying oil companies left and right, and what his historic buying of oil is telling us. Hello and welcome to the Market Watcher, a place for gathering traditional financial and crypto knowledge on a regular basis. Subscribe to the channel and hit the bell icon if you want to drastically increase your proper financial perception and skills. During the pandemic, the price of oil briefly went negative for the first time in history due to the shocking lockdowns and sudden lack of demand and high supply. Since then, as seen on the chart provided by Trading Economics, the price has skyrocketed, and this is due to the massive money printing and the situation in Ukraine. Oil briefly touched $140 per barrel and now is sitting around the $100 per barrel mark. Because oil is needed for almost all businesses, the higher prices of the commodity are of an enormous expense for every company. This is bringing their profits much lower, and the rise in oil directly correlates with higher inflationary levels, which bring tremendous hardships for normal consumers. The best way one can protect himself from the higher oil prices is by investing in the sector directly. As we talked in our previous video on the channel about the coming stagflation, the current times are the most hard for all types of consumers and businesses. In short, stagflationary times bring higher inflation and higher unemployment. Those times bring the highest level of so-called economic misery. In times of normal inflation, the prices are rising, but most people have jobs and their wages are also rising. In times of deflation, we see higher unemployment and wage drops, but also prices of all goods and services and assets are also falling. But in times of stagflation, prices are rising, and at the same time people are losing their jobs, which brings a lot of economic uncertainty and fear. The last time we have seen stagflation is in the 70s. Then, just like now, oil prices skyrocketed, and the oil market was the best place one could invest, not only to protect himself, but also to make a lot of profits. As seen on the next chart provided by Bison Interest, we see all major assets and their performance during the 70s decade. The returns are inflation adjusted. The energy equities, which means companies in the oil, coal and gas sectors, crushed all other assets with a 73% real returns. The second best asset class was real estate, and all other major assets like bonds and stocks lost value in real terms. This clearly shows why we must increase our knowledge regarding the energy sector if we want to prosper during the coming hard economic times. Just like Warren Buffett's teacher Benjamin Graham says, we should always invest with a margin of safety. A margin of safety means we should expect a bad outcome, and even if it happens, our investment should still be okay and profitable. So let's discuss the future probabilities for the oil price. This colored in green and red graph of oil provided by Lynn Alden's website is showing us that most oil companies which extract oil are highly or well profitable above a $60 per barrel price of oil. With the current price being closer to $100, a lot of oil companies are making record-breaking quarterly and yearly profits. as stated by all major investment media. According to Lynn Auden, her opinion is that it is hard for her to see a sustained price of oil around the $60 range. And she backs her statements with facts. Just in the last 2 years, the US broad money supply has increased by 40% since the start of 2020. And this has trickled out into various prices of goods and services, resulting in what will likely be permanently higher prices of many things. It is impossible to have such an increase in the money supply without having sustained and high prices. The value of goods and services has not changed, we just have much more paper in circulation, and now we will need more of this paper to buy the same stuff. It has just devalued its worth. Another very important factor for the future price of oil is the record low investment in capex in the sector. Capex means capital expenditures, which are basically investments in infrastructure. When there are no investments in infrastructure, this means oil companies do not have the capacity to pump a lot of oil from the ground. This makes the supply inelastic, which means when the demand goes up, supply cannot follow it, which brings prices much lower. This simple dynamic is a major driving force behind the increase in oil prices. It is also important to understand that it is not easy to build infrastructure. First, we need to explore the ground and find new oil, then comes the building, then comes the investment for equipment, and only after that the supply can start rising again. This process usually takes 5 years at best, which means in the coming years we will not see any drastic change in the production of oil. At the same time, the money supply will not stop to inflate, which in the long term is another main driver in the increase in prices. With the combination of persistent currency debasement and these cyclical commodity capex cycles, we get a big stepwise permanent change to a new normal of oil prices every once in a while, as expressed by Auden. On the next chart, we see these levels and how it changes over time. The chart is a logarithmic chart, it is not linear. During the 40s, we saw massive expansion of the money supply and lack of production. This changed the price of oil drastically. Then in the 70s, we saw another massive change in the oil price due to money printing and low capex levels. Then in the 2000s, we saw the next rise, and the past is telling us, yes, we will see this again. Each time when we see a massive expansion in the oil price, we never see oil prices going back to their old levels. The only exception is the pandemic, when oil prices briefly went back to the level of the 70s. Another person who is betting heavily on the future rise in oil is the great Warren Buffett. Buffett historically is against investing in commodity companies, and very rarely he invests in such cyclical businesses. Currently, Buffett stated in his recent interviews that his recent heavy buys are a bet on the future rise in oil prices, and he uses those investments as inflation protection. On the next chart, we can see Buffett's history of buying oil and gas companies, and his track record is impeccable. Each time when Buffett bought, he made insane amounts of money. During 1956, he bought a heavily undervalued oil company. Then his bet was not on the future rise of oil, it was a bet the under-evaluation will make him a juicy profit. And he was correct. In 1983, after a record increase in oil prices during the last decade, the 70s, Buffett stated that these natural resource businesses were not earning excess returns. As such, he forecasted that they would see share prices burdened by higher required reinvestment in the sector and limited ability to pass on those higher increases to consumers. During the next 15 years until 1998, oil prices fell drastically and Buffett was completely correct. Then in 2002, Buffett entered the oil market again when he took a large position in China's largest oil company, PetroChina. Buffett entered this business because it was incredibly cheap, trading at only 3 times earnings, or a PE of 3 in more technical terms, and they distributed a 15% cash flow yield. During that time, Buffett faced pushback from other notable investors, but what happened after that is not only an incredible investment which netted Buffett incredible dividends, but the price of oil skyrocketed by 300%. This netted Buffett a return of 720% in just a 5-year period, which made him a 52% annualized return over the period. He turned an investment of 500 million into over 4 billion. As seen on the chart, he then exited PetroChina just around the peak of the oil price. Currently, now is the 3rd time in Buffett's career where he is buying oil. This time he is buying Occidental Petroleum and Chevron. He started buying just around the bottom of the price cycle, but he is also now buying when the prices of oil are around $100 per barrel. We believe Buffett has an incredible investment touch and his track record proves this. It is important to note that currently the US and China are both compressing the price of oil. The US is selling close to 1 million barrels per day from its strategic petroleum reserves. Those reserves are there to protect the energy independence of the country. They are selling oil from those reserves to bring the supply up. With it, they are trying to bring prices down. By the end of 2022, this will stop, and with it, the current supply on the market will start to decrease again, and this will bring prices higher. Not only this, but at some point in the near future, the US will need to start buying oil again to fill up its strategic petroleum reserves again, which will increase prices even more. On the China side of things, they are currently still in partial lockdowns due to their zero-virus policy, and their demand for oil is still being repressed lower than normal. This means they're using less oil than normal for transportation and production of goods. These lockdowns will sooner or later end, and with them their demand for oil will increase. As we know now, when the demand increases and the supply is inelastic, the price is going higher. All of those supporting facts are bullish for the oil price and all energy equities in the sector. Now you know them and you know how to protect yourself in the coming hard economic times. Subscribe to our channel and leave a comment on what future videos you want from us. Thanks for watching until the end, and I'll see you in the next video.